Good morning, everybody. This is Market Update for September 26th. The S&P 500 and Dow Jones Industrial Average fell on Wednesday, reversing from their most recent record highs. The 30-stock Dow dropped 0.70% to close at 41,914, while the S&P 500 lost 0.19% to settle at 5,722.26. In early trading, the Dow and S&P 500 both set new highs, but the blue chip index ultimately ended a four-day winning run. The Nasdaq Composite managed a meager rise of 0.04% to close at 18,082.21. As U.S. crude oil futures declined, energy sector led the 9 out of the S&P 500's 11 sectors lower. One area of the market that did well was tech. With a 2.2% increase, chip giant NVIDIA's market capitalization surpassed $3 trillion. All three averages point to a good September, but concerns about a slowing economy remain after the Federal Reserve's rate cut last week. The S&P 500 has so far been able to overcome what is typically a weak September thanks to the central bank's interest rate decision. European markets ended the day marginally lower on Wednesday as the surge driven by China lost momentum. The Pan-European Stoxx 600 concluded the day down 0.11%. The European Banking Index dropped 0.73% as investors watched attentively UniCredit's swoop for Commerzbank, the second biggest lender in Germany. In other news, Sweden's Riksbank lowered interest rates by 25 basis points to 3.25% on Wednesday and hinted that there may be further reduction to the policy rate in the two remaining meetings this year. Backed by the monetary stimulus efforts of China's central bank, European markets closed 0.6% higher on Tuesday. The best-performing industries were mining, technology, and household goods. Britain's economic growth outlook has been upgraded by the Paris-based Organization for Economic Cooperation and Development, OECD, on Wednesday. According to the OECD, the UK economy will grow by 1.1% this year and 1.2% the following year. Following the news, the FTSE 100 index in Britain rose by 0.3%. But, by the end of trading, it had fallen below the flatline. China equities led Asia-Pacific markets on Wednesday, helped by Beijing's announcement of stimulus measures the day before. Mainland China's CSI 300, led by consumer cyclicals and industrials, reversed advances to settle at 3,401.53, up 1.48%. Hong Kong's Hang Seng Index was up 0.63% as of the last hour, after climbing more than 3% earlier in the day, on pace to hit its highest level since May. Following the announcement by the Central Bank of China of a series of economic support measures, mainland China's CSI 300 saw its biggest one-day increase in over 4 years, and the HSI had its best day in 7 months. The medium-term lending facility rate was cut by the PBOC on Wednesday from 2.3% to 2%. This is the second reduction in the MLF in roughly 3 months, following the late July rate cut by the central bank from 2.5% to 2.3%. Besides, the offshore yuan experienced a brief uptick against the US dollar, rising to 6.995, surpassing the 7.00 mark for the first time since May 2023. On Wednesday, investors also evaluated Australia's inflation data. The CPI increased 2.7% year-over-year in August, matching expectations from Reuters' survey and decreasing from the 3.5% increase in July. Other Asian markets closed mixed at the end of Wednesday. Australia's S&P/ASX 200 saw a decline of 0.19% to 8,126.4, marking the continuation of 2 days of losses. The Japan's Nikkei 225 fell 0.19% to close at 37,870.26. The South Korea's Kospi sank 1.34% to end at 2,596.32, ending a 6-day winning streak. This wraps up the market update for today. Have a great day ahead. The news and images in this presentation are quoted from CNBC.